All of you uh, to the afternoon session on democratization of financial health, learning from emerging and developed nations. So along with this session, we will have a report launch. For that, we'll do that first, and then the real panel will start. Panel discussion will start. So may I request Sabina, Yusuf to come on stage for Yasmin. I'm so sorry. Sabina, Yasmin to come on stage, please, to moderate both the sessions. And I would also like to request Rakhi Sahai from UNCDF and Sharon Butu. I'm sorry again for the pronunciation. Sharon Butu, am I correct? Butu. Also to come on stage. So we'll have the panel discussion later on. Sabina, to you now. How would you like to go about the report launch?
So, hi, I know this is a post-lunch session and apologies for the delay, but we'll try to keep it interesting in all our conversations. But yeah, I'm very happy to also accommodate, we have the report launch, which leads actually to this technical session. Just to give you a little brief, the report we are about to launch today is on developing a financial health scorecard. And we did that exercise, piloted it in India for the other countries to sort of take the learnings from us and, help in different iterations to improvise on it. But throughout these discussions, we'll try to understand why understanding financial health is important. It may be a new concept to some, but definitely something that you have been doing in your everyday lives without realizing the whole importance of it. But then, I'll not delve too much into it because then I'll call somebody who is sort of also architected the entire study along with us from UNCDF, Rakhi, to come to the dais and speak a few words.
Hi, everyone. Thank you so much for giving us the opportunity to kind of come and talk to you all. UNCDF has been working with Access Development Services and Lead Kriya since the beginning of the year, and together we are building a community of practice on financial health and well-being. The whole idea is to look at how do we shift the goalpost for our own selves and look at a more impact and outcome-based indicator model that helps us track people's well-being, particularly economic well-being, where we look at resilience and security, control and freedom in a more holistic manner. We feel that through this entire community of practice, we are aiming to bring forth the right kind of conversation, get the right kind of organizations. Globally, there have been institutions who are experimenting in building evidence around financial health. And the panel that we have, and we have excellent speakers, and I personally look forward to kind of learning from everybody here. The report essentially, Sabina, thank you so much. It's been extremely well received within UNCDF as well, and so big round of applaud to Lead Kriya, certainly on that. So with that, I would not take much of time. Thank you so much, and look forward to the session.
Thank you, Rakhi. And while we sort of, we'll unpack a few findings from the report throughout the technical session, but at this point, Sharon, because we'll love to hear from you how important it is to understand financial health as well, because you have, in your past studies, understood one very difficult segment of the population, which is the gig workers. So just few words from you on that.
Great, thanks, Sabina. I think even last year at this very event, I also was on a gig pulse kind of thing. So it's nice to see the continuous efforts. I think that's how, being a researcher, I think that's how progress works. It's almost like this Swiss cheese model where someone looks at one part of the problem, the other one part, and eventually you create awareness and accumulation of knowledge and you figure it out. And some of the evolution of the 15 years, we have figured out some of the things in finance. In fact, we just had a roundtable on that. But one particular thing that I want to add to complement to what Lakshmi is saying is that I find the gig workers segment extremely fascinating, not because of the segment itself, but it is a sort of like symptomatic of what is the emergent work structure going forward. So when you look at people, when we ourselves look at other gig workers, they're very different from other segments, but even within the gig workers segment, there are super nuances. So our view of like people needing social protection and constraint and things like that probably represent a smaller portion of the gig workers, like a little bit older. In general, the population is young, but there's a similar amount of people, for them, gig work is part of their overall portfolio of work. So people have several small jobs to make a living. And sometimes it's just that small job or that gig work to accumulate asset to be an intermediate piece of work before they skip on to something else. So where does finance fits in the picture? It's extremely critical and important. Because while their portfolio of work has evolved from their perspective, the financial systems have not. So these people do not have a regular salary with a salary slip. They have several digital pieces of work, and maybe some pieces of work where they pay daily labor. Some people have digital trails through Swiggy and things like that. So I think more than the segment is the evolving finance structure that is required to serve people who have jobs where technology enables people to have several work portfolios, in a sense. So now, so far, it has hit a lot. Sort of like when you think about gig workers, you think about delivery people, but eventually, it could even be people in the knowledge sector, where you can see even accountants might take gig worker. One portion is a financial advisor, another. So how do we imagine futures like that? So I think this is just the beginning of understanding resilience. It sets a framework that would be amendable to gig work as a whole and portfolio of work as a system. So I congratulate. It's very difficult to come up with these numbers, and I think this is just the beginning. And I think we've talked about as well how to increase the numbers. Sabina actually had an idea how to snowball data very quickly. So I'll talk to you about that on the front. So I look forward to the next step, and I'm happy about this report. And congratulations, Sabina. Thanks.
Thanks, Sharon. I also have Nidhi with me, who will be helping. She was instrumental in bringing all the partners together and facilitating this study from Axis. So thank you, Nidhi, for all the hard work. So I will just request you to present the copies to Raki and Sharon so that we can unribbon it.
Thank you, Raki. Thank you, Sharon. Thank you, Nidhi, for coming on the stage for the book report release. Now we can have the session. For the session, may I request to join on stage our esteemed speakers, Mr. Amit Arora, Rural Development Financial Specialist from World Bank, Ms. Sweta Pereira, Senior Director Action, Ms. Leena Datwani, Financial Sector Specialist CGAP, Mr. Udit Kariwala, Chief Financial Officer, Vastu Housing Finance Corporation Limited. I hope we'll have a great discussion. Over to you, Sabina, now.
Thank you, Subin. Oh, suddenly I'm so loud. Yeah. Thank you, Subindu. It's a pleasure to have such a rich panel out here. They don't need any introduction, but we have a mixed pool of panelists, as you can see, from all sorts of organizations in the ecosystem. And I'll start the discussion by actually answering one of the queries Shweta sent me. Shweta said, you know, what is actually democratization of financial health, you see? And I was like, yeah, let me start the panel with that, because we've read quite a lot about, even the Harvard economists have written quite a lot about democratizing financial inclusion, which means like, you know, every individual has not just access, but also sort of is able to choose, and then have enhanced their own financial capabilities, along with the other journeys in financial inclusion that they have. And in the context of financial health, it means like, for me, in today's discussion, it definitely means to build an economic ecosystem. Actually, let me not limit it to just the economic ecosystem, but it's like a overall ecosystem with the economic, social, and cultural infrastructure that we have, and make sure that all the stakeholders work together in improving the well-being, financial well-being of the people. And very much when we talk about like health, and this is something that I have highlighted before as well, the first thing that comes to a person's mind is, what is my physical health, right? People can really tell you how well they are doing physically, but when you ask them about their financial health, when you ask them about their mental health, those are difficult questions to answer. And this is one holistic approach to it, right? Because your physical health, financial health, and mental health are very much correlated. And one of them can be the driving as well as the contributing factor for the other one and impact the other one, right? So I think like we want to definitely try and understand what is financial health. But that you have to read a little bit on the report that we just launched, get a copy. It was not just for the photographs, but do read it. But then like, we tried to address understanding financial health by going beyond financial literacy, financial security, financial control. We are not there with financial freedom yet, which is, I feel, more applicable to the developed countries, you know. With the developing countries, I think it's more about financial literacy, financial capabilities, financial security, most importantly. We recently had the COVID-19 pandemic, which brought forward how ill-prepared we were to sort of snapshot of how we measured financial health, which was a mammoth task in itself. But then we decided to have like 6 broad dimensions or components of financial health, which was, you know, savings, spending, borrowing, resilience, and decision-making. So all of these 6 dimensions contribute to your overall financial health. And most of the times, some of these are correlated amongst themselves as well. It was difficult for us to sort of very concisely come up with indicators that can help us assess financial health, but we tried to sort of stick to very key questions on resilience, on spending, on borrowing, so that we capture most aspect of it. While doing so, one thing we found in the report is that a majority so we focused on the gig workers, of course, because you understand that makes an interesting case, because income is something that is very core to your financial health. And this is one segment of the population that is most sort of exposed to employment and income shocks. And therefore, we sort of thought of studying this population segment a little better because, okay, hey, if we tested this on them and it worked well, then we are good to test it in with other segments of the population with stable income as well. So having said that, we, and understanding financial health, we tried to keep some 18 questions, 3 questions each for these categories. We wanted to do some 99 questions, but sorry, because on the larger side, when you want to deploy this on various platforms, and you want people to use this as a tool, you want it to be easy to sort of take the financial health test, as well as like, cost effective and time efficient as well, right? And also something that can be self-administered, right? You can yourself go, and which we have onboarded it on the COP platform for people to go and do that. But while we did all of this exercise, and I bring in the insights of our journey of going ahead with measuring financial health and understanding financial health, I would actually ask Shweta, because you did, Axion did a similar exercise of understanding or developing a financial health framework for the enterprises, right? So could you share a little light on how that exercise was, and what are the key variables or factors that you looked into? You can also shed light on what were some of these challenges, because we know data is always a challenge, not just the measurement.
Does this work? Okay, thanks. Sabina, could I have my slide?
Could we run the presentation, please?
Yeah, so thank you for that question, Sabina. And yes, Axion actually in its over 60 plus years of being and working in the financial inclusion sector has always focused on MSMEs as a core group. And as we heard even earlier this session, at the inaugural session, MSMEs have an outsized impact on the GDP as well as employment. And so the Center for Financial Inclusion, an independent think tank at Axion, in the year 2019, set about developing the financial health framework for MSMEs. Yeah, and the way they defined financially healthy MSME is an MSME that can break even or at least see profits over a period of time. And what they did, they also said a financially healthy enterprise is an enterprise that is able to weather a shock. Can you go to the previous slide, please? That is able to weather a shock, an economic shock, and at least come back to being break even. So that's how they defined a financially healthy MSME. So what they did in 2019 was, after an extensive sort of research of literature, speaking to industry experts, they also did a face-to-face interview to just validate the framework with micro enterprises in Nigeria and in India. Can I go back to the previous slide, please? Previous slide, please. Yeah, the second slide. Thank you. So as you can see in this framework, really the outcome over here is for MSMEs to achieve a profit or to break even over a period of time. So they measure profit and resilience as the two outcomes of a financially healthy MSME. And they looked at individual factors and contextual factors. Individual factors are those factors that kind of differentiate the performance between MSMEs, like why does one MSME perform differently from another MSME, and contextual factors being what are those kind of external factors that differentiate between groups of MSMEs, could be men and women. And so in the individual factors, they looked at entrepreneurial psychology, financial and business capability, and financial products and tools. In entrepreneurial psychology, it is just the personality traits, the tenacity, the drive, the focus on business. Financial and business capability are the knowledge, skill, attitudes, and therefore the behaviors of an MSME. For example, does an MSME aspire to keep records, a budget, or even aspire to begin keeping some small softwares in their business? And the financial products and tools are the formal and informal tools that an MSME accesses and uses, for example, credit, savings, insurance, cash transfers, that they use to manage their personal lives and their businesses. So they identify these factors as the ones that differentiates one MSME from the other. And then when looking at contextual factors, these are those, they looked at the socio-political context and the economic ecosystem. So this is around just how does the MSME perceive government programs, rules and regulations. Like in just one of the face-to-face interviews, one of the entrepreneurs in Nigeria, for example, said, my business is simply not moving because of elections, right? So one group of MSMEs will perform differently from other groups, depending on how they perceive that environment. And socio-demographics, as we all know, is core. So the CFI, they identified gender, age, gender, marital status, education, and decision-making abilities as some key factors there that differentiate one group of MSMEs from others. But yeah, I mean, all this together to be able to say, how do MSMEs actually achieve those outcomes of profit and resilience?
Thanks, Shweta. That was insightful. And while you talk about enterprises, I think like it's important to have a holistic understanding of financial health of the entire economy as well. And these sectors, segments, enterprises are also in one way or the other driven by individuals. So the individuals also need to be equally empowered to understand financial health. I'm giving you a small anecdote because this is one work that we did with the Women's World Banking. I don't know we have them in the room or not, but it's good to share this because when we like one of the reinsurers wanted to design a business risk insurance product for the business. So when they went out there and they did this qualitative interactions with all the women micro enterprises, what they found is like they said, it's not really a business risk product that we want, but maybe like our health expenses, which is like bringing us down in the ladder. So you see like, what I want to say is that individual financial health is essentially interlinked and the household financial health is essentially interlinked with the enterprise's financial health as well, right? And with that, Lena, I would like to come to you to understand one thing, like while we measure like the financial health, and we decide, so one difficult task, I'm sure that was true for Shweta as well, was to decide what are these metrics of measurement. Because there is so much of diversity out there, whether you're talking about enterprises, they are defined in different way, whether you're talking about individuals, there is a gender perspective to it, there's age-wise segregation of people, but we understand that financial health is essentially a life cycle approach, right? But then there is, and since we are talking about taking the financial health scorecard to different geographies, different segments and different economies, we are very mindful of the fact that they come with a very different social, cultural context as well, right? So how important it is to sort of consider the local context and the differences and to integrate it in sort of measuring, whether it's, let's say, if financial health is too broad to address even financial inclusion per to say, right? This morning we just had a panel to just understand that better. So how do you, how important it is and how do you think we could sort of address these differences in different contexts? Yeah.
Thanks for that, Sabina. I think it goes without saying that financial health measurements, methods, and indicators that are being collected need to be kind of nationally relevant and tested so that it's applicable in the local context, reflects local realities, and is really contextual. And it's also worth pointing out, I think we all know this, that most of the current kind of knowledge about financial health measurement was developed in a small number of developed countries. And the practice of measuring financial health in kind of emerging economies is still very early stages. And these methods that were developed in developed countries may not work or translate well into the local context. But taking a step back, I think we need to, before we get into the metrics of measurement, it's also kind of ensuring that there are a few foundational pieces in place, whether we're talking individual level, household level, enterprise level, or anything else. And for one, I think we need some sort of broad conceptual framework or theory of change that really grounds financial health in relationship with other elements such as broader development outcomes. And, at CGAP, we see financial health really not as an end in itself, but as an intermediary outcome in achieving those kind of broader development outcomes, whether it be economic empowerment, food security, resilience to climate change, whatnot. And, I think related to this is the need to develop common language, common definitions, common understanding of what we're talking about when we talk about financial health. I think everyone recognizes that financial health and resilience are deeply connected. And I think the short-term financial resilience to kind of financial shocks is kind of reflected in those definitions. But when we talk about longer-term concepts as it relates to financial health, whether it's, kind of adaptation to climate change, that's still kind of absent. And, without clarity on, and, we can expect some of this to be coming out next year, 2024, so relatively recently, shortly. And then at CGAP, we've also kind of reviewed 1,300 indicators around financial inclusion, from about 40 to 45 sources. And we see that only about 200 of them are linked to outcomes. And a portion of those really about resilience and financial health. So we're going to put together a compendium and release it, but that says a lot about what's not being measured. And, I think when we're measuring, there's a few attempts to measure financial health from the demand side, right? Like Findex asks survey respondents about their ability to come up with emergency funds in 5 days or 30 days, and some others look at how they're feeling about their financial health. And, all of this is very useful data points, but it's highly subjective and often goal agnostic, right? So if we're talking about outcomes, it needs to be a little bit more targeted in some ways. And then we're also seeing kind of supply efforts to collect data from the supply side to understand financial health. And for example, the central bank in Brazil is looking at supply side credit data, delinquency, a number of credit lines an individual has open to determine their risk of over-indebtedness as a proxy to measure financial ill rather than financial health. And, I think these 2 points offer different perspectives, both equally important, but also need to kind of figure out how, as the ecosystem, we use both of these, kind of this top-down plus bottoms-up approach, and marrying these two and kind of having a more holistic kind of view of financial health. And then I think my last point on measuring financial health is really, what are we doing to ensure that it's actionable and for whom, right? Because if you're a provider looking at financial health, you may want a certain set of indicators. If you're a policymaker or regulator, maybe something else. So it's not just measuring financial health for the sake of measuring it, but again, to make sure that it's being targeted to an audience who can then take action with them. I'll pause there.
Yeah, absolutely agreed. I mean, there's a diverse set of stakeholders, and it's important to consider the use cases for financial health as well while we do this. So while we do this and understand financial health, I mean, we have a very nice crowd here. We'd like to do a small poll. As I said, we talk about savings, we talk about credit. And while we were doing this exercise in the office, we used to very often get hold of people and say, hey, take this survey, let's, not all of them were very pleased with what they found because I think, believe that, we are definitely financially healthy. But there's one question for you. I don't know if you can put it up on the, so Bendu, is that inbuilt there? Yeah, for the poll. We want to run the poll now. But then the story is that, many of them were disappointed as to, hey, what your scorecard is telling me, I'm coping. I'm struggling. Why is that so? And I was like, oh, okay, your savings are fine. Your debt management is fine. But what about like planning? How frequently do you budget? Do you do a formal budget for yourself? What about decision making, right? And how frequently do you think about doing these long-term investments, right? Is it something that you want to like tick mark just to get your tax benefits done, and then like, or do you really want some sort of a security and resilience for yourself? But then when we talk this about a very literate audience that is there in the room, I have Amit with me, who actually is very instrumental in taking financial inclusion on the ground with huge masses on geographies, areas, and population segments which was difficult to reach through the livelihood programs. So Amit, I think we would love to hear from you, because I think through the NRLM and SRLM you have which focuses, because Lena said, right, it's behavioral as well as it's outcome-based approach, and you sort of integrate both and then measure financial health, right? For the longest time, you have sort of worked on enhancing the savings profile of the people, and then a little bit on the credit. You have worked with the SHGs, right? And then I think it's also a feature of the NRLM SRM program to have a corpus fund where members sort of contribute themselves to build more resilience. But what are your experience been so far, and what is the potential to move forward to these other dimensions, which can be both behavioral and outcome oriented, you see?
First of all, I'm struggling with my own financial health. A disclosure. And yesterday I was hoping that we'll get to read this beforehand, so that one can sound intelligent by going through it. It's not happened, so I'm struggling to give you an answer. Several years back, when I was in my previous role at GIZ, we had done an exercise to understand what financial capability means to lower income segment. So, when through the process of surveys, I had the opportunity to do some first-hand interactions. Went to a farmer for him, financial health / financial capability, because these words were not used in the survey, so I'm using it fungibly. For him, all that meant was the day he'll be able to get a patch of land in his name, that's his end target, outcome. You call it financial capability or health, that was his target. Coastal Kerala, how fishermen defined it, the day his net breaks, he is not required to go and get money from money lender or a bank, and he has enough savings so that he can purchase a new net for the next day. That was his definition. So the learning was, this has to be localized, and it will continue to be interpreted differently. And we struggled with a common definition and things like that, but a lot of more work has happened thereafter, and there is a lot of literature here. I may forget the question in the process, so bring me back. So this is just to say, there are so many dimensions. The problem as the ecosystem we still have, when a financial service player, has a product or a service that they deliver, they don't factor these elements. For them, the ROI, the unit economics is what matters, and fair enough. So fundamentally, the solution to that problem needs to be figured out. Again, a PPP or a grant and a combination of the rest will have to be worked out. But to be able to do that, I can again give NRLM example, which is not much spoken about. NRLM again uses that last mile network, the community cadre, whom they call FLCRPs. So these cadres go to a village and conduct a financial literacy session, 1.5 hours so. And now, after a lot of back and forth and hit and trial, the first session is purely on doing a baseline. And the first question in the baseline is, are you able to do signatures? Are you able to sign? So that's an indication of a level of your literacy, not even financial, but literacy. and then the next level of questions come up accordingly. That gives you some idea of the segment that you're dealing with. You get a hold on where we stand as is, then go back, decide on the session, come back, do your first session, keeping in mind this segment, and then 30 days after that, 60 days after that, 90 days after that, don't do evaluation, but figure out what is the change. In between, what happens is, this FLCRP connects with a BC Sakhi or a Bima Sakhi or a similar other Sakhi and says, hey, I went to this group that day, this lady didn't have a bank account, this lady still didn't have a PMJJBY, you come to me next time when we go there. The other Sakhi may not wait for the next session because she is incentivized herself, she will go and cover. So by the time 30 days later when the FLCRP, this community cadre goes, she already sees some improvement. Fortunately, now this is getting digitally tracked also. One thing what is not getting captured, and to partly respond to your point, is the behavioral aspects. So that's the tricky point. That's not a data set that is easy to capture, and I don't have very straightforward answers. Very often, I'm so shy when 6 others are saying I have all of this and I don't have. I don't say I don't have. So that is dependent upon this community cadre to engage with me separately, then do some form of a counseling and try and bring her as part of the fold. So from exclusion to inclusion, that's little difficult to capture. But the process with some human-centric behavioral training that can be given tries to address this. So that's been my broad learning in this. And this in itself is also leading to offtake of products. While, the service provider is not investing in financial literacy, but, and would not know that before they sold this product or service, this effort hadn't happened, but there is a clear indication that offtake is happening, because clearly after 90 days or 120 days, you see the number of accounts, usage is increasing.
Actually, Amit, you mentioned an important point, because even from the supplier side, when they are offering products, they very much are lack the data or profiling of the customers. And with the comprehensive understanding of a of a person's profiling, one is able to not just design but also deliver targeted products to the population, right? So Udit, I will come to you next because I think we would want to know, like, why. We are definitely stressing so much on, psychographic profiling of the customers here, right? What is your experience have been like? You are so much into the credit space, and you sort of have dealt with different sort of income segments. Is there any gender-wise, income-wise, geography-wise insights that you want to bring in from your experiences on the behavioral aspect of it? And by the behavioral aspect of it, I mean, like, what is your experience been on loan repayment behavior of the consumers? Is there any variation there? You see. And how such information is going to be a goldmine for you if you just had a prior knowledge of this person's assessment, because the current definitions around like assessment tools that the financial institution uses, whether it is a CIBIL score or not, is very sort of gives you just one-dimensional measure of things, right? Yeah. So.
Yeah. Good afternoon, everybody, and thanks, Sabina, for this. So before I kind of answer this question, let me introduce what does the company do so that you have context in whatever I speak. So Vastu Housing Finance is an 8-year-old housing finance company. We have outstanding loans of upwards of 80 billion spread across 15 states, pretty much capturing 82% plus of the revenue and profit pools in the whole mortgage lending space. So I think Sabina, couple of interesting points, and I'll answer the question, but I was also taking few notes, and there were very interesting things which came out in the discussion. And I will kind of lay some context and then try to answer, because then it becomes more interesting and it ties up well. I think the starting point and a very interesting point was made by you in your definition of financial health. How do you define, right? A key parameter which came out was resilience, right? Now, my question is, if I have to ask you, the most powerful country in the world is most debt laden, or it's amongst the highly leveraged, so to say, countries in the world. Still, they are able to get more money, right? Now, what does that say, right? It says it's all about confidence, right? Typically, the rich are able to get money even in bad situations, and there are many large companies and large individuals who may be debt, all over the debt or leveraged, but still are able to. Now, is that resilience? The answer is probably yes, right? Now, the question what I'm trying to, the point which I'm trying to address is, it's all about our confidence on a certain segment, because money pulls money. To earn money, you need money, right? That is where you will save and invest. And all of that goes back to availability. So now I'll touch upon the other point which came in the whole discussion was literacy. My point is literacy comes later. First comes availability. If the schools were not available, you will not be literate, right? So I think it's more about availability than literacy. And today what's happened is, and thanks to government for laying these railroads in terms of whether it is the number of smartphone users or mobile phone users, we have more than 1.2 billion mobile users, more than half of them use smartphones. You have 50 crores plus Jan Dhan accounts, 55% of them with women, more than that. So all of this has enabled availability. Why do I say so? Because another interesting point, came about companies running after profits or unit economics. I think humans are wired that way, right? You will want to maximize all outcomes. And they did so for two reasons. One is, either they were not able to reach, genuinely not able to reach a certain geography or a target segment, or B, there was a lot to do and they had limited time and space to do it. So you would maximize, you would go towards high net worth individuals or rich people, right? Now all these railroads has enabled to bring down the cost and made all of this possible. So what has this done is it's improved profitability, but at the same time, it has created access and availability to people who did not have these, and in turn, created a lot of confidence, right? Which is what I think is paramount in all of this. And in terms of, creating all of this, the resilience comes into picture, because once you have more number of people ready to lend and create financial inclusion, the cycle runs on its own. A very simple example is, I used to be on the research side some time back, few years back, and there was this corporate restructurings which used to happen, and I was very negative about it, that you're just kicking the problem few years later, because the ROCE, or the return on capital generated on those businesses, was very low, right? You are going to sell at 10 rupees, your cost is 11 rupees, it's not going to make any sense. But look at our maid at home, right? If they ask us in advance, isn't that a restructuring, right? But they're able to recoup because the return generated on their business or small businesses, technically in a percentage term, is very high. So if the cycle keeps running, the resilience will come back. And the last point I would like to highlight, and before I get into the specifics, was about data. I think what is happening is, it's not just about usage of data. That is one aspect, but I think there is a lot of data which is getting created by all of this. Institutions like us are submitting data to bureaus, which effectively is creating these building blocks. And again, it's all about confidence, right? Because somebody took that first plunge. In terms of the question on bureau, I think you're right. It's a single variate, because it's about intent versus ability. In my personal view, the bureaus are a good indicator of intent, that you've paid in the past or not, but not ability. Because you could have small loans and your bureau score could be good, So that's a good intent. But have you loaded a larger loan on the same customer? Probably the behavior would shift. Now getting on to answering the specific question that you asked, yes, there are different behaviors, but I think they are not so clear and to demarcate that, basis gender or geography. Yes, you do have certain cohorts. For example, women in general are considered to be more disciplined, I would say, than men in repaying. But then in the segment that we operate, while we have 99% of our loans where women's are, co-borrower, but the challenge is we've got a history of last 50, 60 years where women employment rate has been pretty low. So the employment rate was low, so the income generation was low, so the asset generation was low. Now in a secured lending, if there is no asset, who do I lend to, right? So I think it's a more complex issue than what it looks like. But I think if you're able to assess certain cohorts, yes, there are patterns which we see. And I think it's more scientific to say that it's more about certain segments are more volatile than the other. I'll give you a classic example. Like the dairy industry, while we are not there in that segment, I mean, it's a pretty small exposure that we may have to lending to people in that segment. But when I used to go and visit some of these customers, let's take there's a cattle or a cow that he shows you that this is, the thing I have to generate my income. Now, how do you know it's his, right? Because beyond the point, it could be, neighbor's cow that he's brought in by. It's not like a car where you have a chassis number basis which you could track. So I think it's all about your ability to kind of assess some of these segments, and that is increasing with time, thanks to a lot of things getting developed in terms of scorecards, data sets, different data sets which are coming around. And the behavior also keeps on changing over a period of time, right? And that itself takes me to the point that the scorecard parameters, and we were discussing a lot of parameters, I'm sure over a period of time, those parameters will also change, right? Because parameters are at a point in time. As the macro changes, the environment changes, a lot of things change. People were not born to cheat, right? I mean, we go by that intent when we run the business, and it is something that is making them behave. So if you're able to drive that, probably the outcomes are much better. Yes, there are some patterns. I think women tend to, that's one pattern. Typically, people over the age of 30, 35 tend to behave a little better. And again, it comes from the fact that they have seen, they tend to have a more stable earning than somebody who's less than 35. They typically have families, so they are less risk takers. Their spending patterns are better. In terms of industry, yes, there are certain industries which tend to be more risky, but it's because the nature of the business tends to be more volatile. In terms of geography, across geographies also there are patterns, and hence we chose very early on in our existence to be pan-India and not be regional, because in the segment which we are, most of the players are regional. But again, it's not very state-specific. It is more pockets, I would say. So I hope I've kind of answered the question.
That was very interesting, and I'll come back to your data point. But I really agreed to the fact that, how income security is very important to have good financial health. And, periods of disruptive innovation have always transformed the inequality map. In the light of COVID-19, we saw how this digital inclusion infrastructure that we have built over the years came very handy to tackle the distress. But then again, since income is so highly correlated with financial health, when we went out to measure financial health and we wanted to get a very good understanding from the gender lens, in the digital platform, which is such a good income earning opportunity for the workers, who do not have formal employment, we found we were struggling to get women respondents in the digital platform. And while we did this, we saw that, a lot of the, we also asked them what is the motivation to join the gig economy, and is it the only source of income or the primary source of income? While in developed nations, you'll find gig workers usually take it up as a part-time job, but in the context of developing countries, and specifically in India, we found many of them take it as a primary occupation. Their families run out of it. And this was more for the women, that 13% women that we were able to get in our sample, all had this as a primary occupation. Whereas the men, for them, like some 80%, it was primary occupation and the rest was secondary. But they also had other sort of members in their family who would supplement their income, which was not there for the women, right? While this digital, while we develop and radicalize this digital movement in India, right? Leena, I would like to know a little bit from you, from the gender lens, and how on the part that how income is, stable income is so important for all sorts of the population segment. Can you bring in a little bit of gender lens on how these platforms have been performing, whether they have been exclusionary in a way to not give, I think that's a strong statement to make, but then it's up to debate, right? Whether they have not diversified enough to make it more inclusionary for all sorts of gender. It could be the nature of the work, the geography, etc. Anything that you can give any context to.
Sure, thank you. Before I get into the gender aspect of it, I think it's worth kind of pointing out that income is the starting point, and financial services can play a role in kind of strengthening or weakening that financial health, right, aspect of it. And in that, by kind of optimizing for whatever income you're earning to be able to kind of build resilience, capture opportunities, whatnot. And so if you think about the financial tools that allow you to kind of get the biggest bang for your buck, platforms can play a very meaningful role in kind of facilitating financial services to workers. To begin with, platforms can efficiently and kind of seamlessly deliver a range of suitable products by just embedding them onto their platforms, right? On the customer side, it just makes it easy, efficient, convenient. And on the provider side, it kind of drives down the cost of serving some of these segments who they have never considered serving before because it didn't make sense for them. And then given that the workers engage with these platforms and there's some level of trust already established with the platform, the fact that these financial services are being offered through the platform means there might be more open to engaging with that financial service. And I think the platforms can go a step further in kind of playing a awareness-raising role for those financial products, especially if you're talking about savings or insurance, those that don't sell themselves, those that are not as well understood, right? And then I think platforms can also provide kind of a touch component to this tech process, policy, whatever, worker sees a banner in the form of an ad for an insurance savings on the platform where they work, but then that same message is reiterated through, platform representatives, other workers. They hear about the experience of their coworkers or people that they look up to engaging with that platform. And again, increases the likelihood of them even considering that product. And then, if there's kind of an additional role that these platform ecosystem players can play in terms of hand-holding to onboard onto that platform or answering questions that they might have before they take that leap. Again, I think that's an additional kind of way for them to maybe be more likely to engage with a financial service, right? So I would say the only thing is that there's a little bit of evidence that's beginning to show promise for the role that platforms can play in building the financial health of their workers through financial services, but I'd still say it's early days just because financial services through platform itself is in early days. But I'd say it's to be determined, but to be watched with kind of promise. And, you know, unfortunately, applying the gender lens to women on platforms in general is just really difficult. The nature of the work that is kind of mostly available on gig platforms is, you know, mostly tailored to men. But I would say that, you know, an urban company, for example, that does have a large portion of women, they are offering insurance and savings and credit. So again, something to continue to watch, hope that they continue to experiment with. And, you know, the only thing is that, you know, the way that financial services are offered through the platforms, it's really very much data-driven, which is presents huge opportunities, but also there's a huge risk of excluding, right? If you're only kind of offering insurance, for example, to your highest performing women on those platforms, then those continue to kind of get more and more financially healthy, while those that don't have access get left behind. And so a bit of a, I mean, it has both inclusionary and exclusionary possibilities, but how do you kind of balance the two? And I think the other thing to kind of keep in mind is that there are kind of offline, even informal kind of resilience building, financial health building mechanisms, institutions, organizations that are tried and tested, right? So how can platforms kind of look to those, draw insights from kind of women or even just worker behavior, attitudes, engagement with, especially kind of resilience building financial services like chit funds, for example, you know, in India, for example, or globally actually, kind of the group construct has gone a long way for decades, right, in terms of savings behavior. So how do we kind of bring that into the digital fold, whether it's on a platform or elsewhere? So.
On the savings behavior, you know, like the Findex has this question on how easy or difficult it is for you to raise 120 at GNI per capita. In India, it is 7,500, right? Now, that 7,500 means different in different countries to different population. And there is this study where they looked into what that means for different countries. So they compared Rwanda with UK. And in Rwanda, for, you know, like that amount amounts to some 2 weeks of, if you want to survive on your past savings and you want to raise that amount, and how, you know, they found it like very difficult to raise that amount. Whereas in UK, they said it's relatively easy to raise that amount. In Rwanda, you know, they also saw like if you lose employment, how long could you last with that, you know, with your income or past savings. And largely, you know, the people there said that, you know, we can just last 2 weeks or more. And in UK, they said like comfortably around 5 to 6 months, right? But then when they asked like what would be like, how would you survive those few months and from where would you raise this fund, most of them relied on family and friends in Rwanda. And what they did is, very interestingly, they segregated this responses on top of 60% of the rich population and, top 40% of the rich population and bottom 60%. And they saw there is quite variation in that as well, because in the bottom 60%, they said that, you know, they would want to sort of borrow it from family and friends, but the top income category, they said that we will use our past savings, you know. So there's a difference in the coping mechanisms as well, but it also gives a good implication how saving habits of these people have been in the past, or the ongoing saving behavior that they exhibit. And with that, I think you also touched upon how digital platforms can sort of also enable, sort of inculcate these behaviors through embedded solutions that they can provide in products as well that affect the behavior and outcomes, right? But the embedded solutions in itself can be one needs to do that carefully, and then like, so that it's not very exclusionary in character as well. But while doing so, and Amit, I would like to know from you here, how easy, difficult it is, on the cost-effective side of going forward with embedded solutions like that, or even if not an embedded solution, but from the policy-making perspective or from the financial service provider perspective, how easy or difficult it is to sort of, and cost-effective it is for them to sort of maybe bundle solutions, as well as, reach out to these target groups.
So first of all, measuring financial health is very, very complex and expensive affair. I think we all agree, and there is no one-size-fits-all solution. Now, coming to embedded, there are advantages and disadvantages depending upon the lens you apply. Now, I am able to cross-sell and generate better ROI. It may so happen, some of the products which are being cross-sold to me may not be suitable to me, but I still end up paying for it without even knowing. But if you want to figure out, design products to respond to my financial health situation, so we need some standardized, scalable solutions where the cost and effort is not largely on the service provider, nor is it on the, say, the customer side. A classic example is credit bureau. Before credit bureaus were available for this segment, how much of a struggle it is. Now it has become binary. I know your credit bureau score, and I decide based on that. Now, given the technological advancement that collectively India has made, technology today allows to have a credit bureau, not a score, but an assessment or a health card at the household level, at least husband-wife, right? Today, when an MFI gives a loan to a woman, whether the husband has defaulted on KCC is not assessed, right? Or vice versa. This is fairly possible theoretically, right? This may need some tweaking in rules and so on and so forth. That's a separate matter. Again, because of technology, one step further. This may be blue sky gazing, but it's fairly doable, or at least worth experiment. Because of central KYC and account aggregator mode. Today, credit bureau is becoming an account aggregator. Why? You can not only get information about credit, but also get information about what are the credits in my bank account, debits in my bank account. That is, segregate my direct cash transfers versus cash flows from other sources. There is a central repository which also holds information whether I have one insurance product or two insurance products. It's just about connecting the dot and doing some experimentation to say, this is what it looks like. And ironically, if my financial health score is lower, no, that should not lead to exclusion. That should actually lead us to develop a product which leads to inclusion. So that is somewhere missing, but I think there is hope that in the months and the years to come, sooner than later, we will move towards that, and we should be able to do that. And if there is one country which can do this, given the digital public infrastructure that is being built there, I think it's going to be India. Somebody needs to just come up and make stakeholders work together, which probably is the more difficult task here.
Absolutely agree with you, and I just want to re-emphasize the point that financial health is not something, it's not a one-time exercise. You need to keep doing it over a period of time. You need to set up a panel for every individual to monitor the financial health, right? Yeah.
I forgot to precisely respond. So if that kind of a health scorecard is possible, where the burden is not on the service provider, then I think this will fly. Today it is too cumbersome. The first question is, who bears the cost? Who's going to put in this effort and for what? So that doesn't add up, but if we can create this kind of a result, this will work.
Yeah, and that's like you said, right? And we said previously as well, and that's what leads to our use cases, correct? But even to build up with good use cases for stakeholders to take up, especially the financial service providers, for whom it is going to be a goldmine of data to just get all of this information about their customers, right? Which is a struggle actually, because then I feel like a lot of it is a perceptions data that you're dealing with, it has to like be backed by some sort of a hardcore transactions or something data that the financial institutions can provide to people who are even doing this exercise. And I'm looking at you with it while I'm saying that. I'm expecting at some point we'll get the data from you. I'm being very ambitious. But anyways, I want to just like come back to you and re-emphasize like the importance of data in doing this exercise, because I think it's only the Australian National Bank that collaborated with CNB to come up with a very comprehensive financial health score with 9 indicators. That's because it was backed by like the data that the banks provided on the customers and their transactions, right, and their financial behaviors. So while we try to this, while all sort of stakeholders join hands to sort of come up with this sort of a robust measurement technique, what is the kind of data that we can expect from financial service providers that can be merged with the to take it up as well?
It's a very important point. I'll just kind of caveat that, the financial service industry is a regulated industry, right? So what we can provide and we cannot provide, it's not just, the question about the company, but it's also about from a regulatory standpoint, what you can, what you cannot. I think that is one important point which one needs to keep in mind. Data definitely is very, very important in the whole space. And I think one important aspect which I would like to highlight is that I think it is high time that we not just rely on external data providers, but the practitioners of the lending institutions start developing some things of their own. Because I'll give you a classic example. Every week I get at least 15 or 20 mails or calls of entities in terms of apps, solution. I mean, looking at their presentations and email, I think so many jargons and adjectives. I think if India could do even 3% of what they're saying, we would be in another world, right? Effectively, in my view, most of them are good, but not able to solve a lot of things. But I think the prime reason for that is we are not, as a financial institution, it's a very simple business, right? It's one of the oldest forms of business. You had money lenders, it got formalized, now you have, so you take money and you give money and you earn some commission out of it or some interest out of it. Now the question is, you're not here to build a NASA spaceship, right? So you don't need the best of the tech. You need tech which can be used by the people who you are employing, who are people who would be 10th pass, 12th pass, or earning 15,000, 20,000, 25,000. They are not people who are Harvard graduates coming and, we are giving them the best of the tech. It's not going to work. So the point I'm trying to say is that it needs to be, and I think one of my panelists over here brought that point about localization. I think that is what is, very important, and hence practitioners should start building tech analytics of their own, start training their models, because it is about nuances and not about 300 parameters. We as a company today, all our tech is built in-house. We have a 85-member tech team, and everything is highly customized. Now I would not like to take names, but there are world-renowned softwares which are there, and people talk about success stories of those softwares in various large banks and financial institutions. There may be more number of failure stories which nobody talks about. Now, is that software or platform bad? The answer is absolutely not. It's brilliant, time-tested, but it's about how do you use it. And that is where the whole localization and customization piece comes into picture. And I think practical and theory, there is a huge difference. So it is high time that the practitioners start building some things of their own and then collaborate with some of the external guys, because they would have advantage of multiple institutions, which is the width, but the depth will always be with the practitioners of the people who are actually lending. So to answer your question, yes, data is very imperative and important. For us, as I said, we've got multiple scorecards. We run it simultaneously with manual underwriting. We are confident that we can go towards scorecard, But at the end of the day, any financial institution also needs to borrow. So my lenders also need to be confident. My rating agencies need to be confident. I think we've got more than 93% match within itself is very high. 7% is not just, which is, something where the algos are not able to do a job. It's also where algos are able to do a job, but my manual underwriting writers are not able to find that opportunity. So it's a combination of both. But I think data definitely is very, very, very important. And we need to use it to make it more cost efficient and timely to lend. I think that is paramount.
Thanks, Amit. I don't want to cannibalize on people's tea time, but if you have questions, we can take one or two questions. Please, if there's anybody from the audience that wants to have a, or else we can even carry forward the discussion on the tea break. But on the just to conclude this session, I'll come back to Shweta. And Shweta, how do you think, like, building on what Udipta just said, how do you think, like, bringing together the different kind of partnerships between private and government as well as civil societies can make this exercise very rich, right? And is it something that we are going to look forward to in Nexian's upcoming work as well, since you recently concluded this wonderful work on framework for the enterprises?
Yeah. No, thank you for that. And also just to take a step back and build on what Amit said and Udit said, we did in fact have a chance to use the framework and measure outcomes. So in a global partnership that Axion had with MasterCard Center for Inclusive Growth about 4 years ago, we aimed to digitally transform 9 financial service providers globally, reaching about 11.5 populations and customers and 4.5 MSMEs. One institution that we worked with was Annapurna here in India, and got 2.5 million customers. And we worked with them to develop a just-in-time emergency loan. Just to give you I realize we don't have much time, but just to give you one example of how we measured outcome was, we did a benchmark and a baseline and endline survey over 2020, 2021. And overwhelmingly, the women entrepreneurs said that they were able to build financial health and resilience. And 60% of them said it was because of the just-in-time emergency product. And I can imagine during that time of COVID, it was just so important to immediately have access to that credit, right? So it's the context of receiving credit to be able to cover your... So about 90% of those who had used the product actually said they were able to cover operational expenses as opposed to 31.5% at baseline, just showing the impact of having a product at their use. So to make the point that financial service providers or policymakers can use frameworks like this to build upon it. You can use components of it to really see, are you building the profitability or the resilience of the customers that we're reaching out to? And so what we do at Axion is actually measure the active digital usage by our customers. And when we did this survey globally, we found that those customers who were actively using our products that we had worked with our partners, they were 30% more likely to see improved business growth as compared to those who were infrequently using digital products. Just to point out to say that ultimately if you design appropriate products based on these kind of outcomes that you want to get to, you can begin to measure it. Yeah, thank you.
Shweta, is there any audience question? Okay, yeah. We'll take one question and then...
Hello. Hi, everyone. My name is Pradeep, and I work closely with NRLM. Mostly what we have seen is in rural areas, we focus on financial literacy. And now we are also discussing about financial freedom and also financial health. So mostly, maybe financial freedom will come at a very later stage for rural areas, but for financial health and financial literacy, can they go together to the rural areas, or financial health can come after, everyone is financially literate. So can they simultaneously go together?
I mean, in the framework that we have developed, it's not one or the other, because when you measure financial health, at least according to the framework that we have developed, it is measuring profitability or being able to break even over time and then building resilience. So financial literacy is a component of it, like the knowledge, skills, attitudes, and you need to have some amount of financial literacy and capability to be able to ultimately build financial health. So financial health will come down the line.
I just wanted to probably say the same thing, but in a different manner. You're probably talking of financial literacy sessions, right? So when financial literacy sessions is the focus on financial lit, I think the content, the curriculum, the delivery itself will take care of, as long as we are clear that these are inputs which have to lead to an output, and ideally one should be able to measure those output. It all means the same. So financial health is a target, even if I may say financial well-being. This process should take us there.
So I'll just add, and it's very well answered, Amit. The only point is, how do you define financial health? If I have to use two words, it's security and independence, right? Now, if I have to ask you a question, can a financially illiterate person be financially secure and independent? I think there are enough and more number of examples, right? So while both are intertwined, both are important, but may not be parallelly necessary, right? And as Amit said, right, financial health is the goal, right? You may have a lot of illiterate people, but may have a lot of money, right? So they are secure, they are independent financially, but may not be financially literate, right? So financial literacy definitely is important, because all of them may not have that acumen to not be financially literate and still become financially healthy, right? So financial literacy, I would say, is a tool to enable people to become financially healthy. But there could be examples where people are not financially literate and still become financially healthy. That is how I would look at it.
Subconsciously, they don't realize, they are aware maybe, but then they don't realize, some level of understanding is always there, in the sense that they know that this money I'm putting somewhere is for my benefit, right? And it's going to give me some return, because even the layman understands I'll not put my money somewhere where I'm not getting any sort of benefit or return in exchange, right? So that amount of judgment everybody has, that builds into sort of then understanding what are these tools through the financial literacy that you do, right? And enhance capabilities as well. But anyways, thank you so much for this interesting discussion around financial health. This is one of the many discussions that we look forward to. And hopefully by the time we all reconvene in the next IFI Summit, we'll have another round of discussion, and to take all these actionable points that we discussed here, and then share our experiences in that platform. And thank you all for being wonderfully participating by not asking too many questions. I'm sorry. But thank you so much. Yeah.
Thanks, speakers, for all the great insights that you brought into the session. Thanks, Savina, for the wonderful moderation. Thanks everyone for your patient listening.